But before that, I think it would be helpful to take a step back and hear from Damon about how we got to this place, where you basically have, union worker pension money being invested in ways that undermines public employees.
I thought it might be. There's a really simple answer to the question that Imogen just asked, and I'm going to give it to you, and then I'm going to talk about a couple of other things that will help kind of knit together what you've heard already. As I said earlier, I'm Damon Silvers, and I work for the AFL-CIO, the America's Labor Federation, and the AFL-CIO has been dealing with private equity, which used to be called leveraged buyouts. They changed their name because the leveraged buyouts had such an awful reputation in the 1980s and 1990s that they thought they'd come up with something that sounded better. But we've been dealing with this business model on behalf of America's labor unions and America's workers for more than 30 years. And I want to bring to you all some lessons from that experience, which might be helpful to the community here, right? So first, let me answer Imogen's question. What these kinds of investment funds, what private equity or leveraged buyout funds offer, as do some other people, they're hedge funds, which are essentially much more short-term actors in the capital markets, but are actually legally indistinguishable from private equity firms. What all these people promise is that they can generate, in a sustained way, returns that are above what you can get in the stock market and the bond market just by buying, in a normal way, publicly traded assets. And that they can do so in a way that is not correlated with what goes on in the public markets. Right? These are the two like pots of gold at the end of the rainbow if you're managing a pension fund. And the reason why this has become so attractive is because both private sector employers and public sector employers, since the end of the 1990s, have simply refused to adequately fund pension funds. And so if you're running a pension fund and you're not getting the money in the front end, you've got to try to make it up at the back end on investment. And there's a dirty little secret about this, which is that you don't actually have to really make it up over time. You just have to have a plausible argument that you might. Right? And the private equity guys are very good at providing pension fiduciaries with the plausible argument. And that has proven to be something that the labor movement has been unable to successfully address. Because perhaps you've noticed, right, we don't necessarily control the levers of power in our society, and you have to be able to do that to be able to get the employers to pay. That's what this is about. And so I want to now talk through with you, because you've heard this described a couple of times, but I'm aware that while some of us in this room have been operating in this world our whole lives practically, for many of you this is like we're all speaking Greek up here, right? So I want to try to walk you through what this is, and then point out where the leverage points are, where the points that you can affect a private equity firm is. So we've talked a bunch about Steve Schwartzman, all right? And I'm going to tell you like a little sort of fairy tale about Steve Schwartzman, and then you'll see how this works, okay? So once upon a time, Steve Schwartzman was just a guy, right? A guy like any of us. And he had this idea, per what Eric was saying, that he could put together a partnership. The partnership would be him, Steve, and a bunch of big pension funds. The pension funds would be, quote, what they call the limited partners, and Steve would be the general partner. The general partner, what that means is you're in charge. The limiteds, you sit there passively and get whatever Steve earns for you. And Steve got the pension funds to agree that they would pay him 20% of what the pool made, okay, what over the benchmark. The benchmark is whatever you can make just by investing in the stock market. So Steve says, pay me 20% of what I can make above the stock market each year. Not at the end of the whole thing, but each year. Plus, give me 2% of the whole pool. Now 2% doesn't sound like a lot, but remember the pool that he raised from big pension funds, again, this is not the real number, but just to get your head around it, early on in this, he persuaded them to maybe give him $10 billion. All right? And then he took his $10 billion. So for starters, right, you have a relationship between our friend Steve and the pension funds. This is what Eric is talking about. Leverage point one is none of this would exist but for the willingness of pension funds and foundations and other institutional investors, sovereign wealth funds, to invest with the private equity. So that's one leverage point. Second leverage point, by the way, is that once you start doing this thing of raising money and managing it on behalf of other people, there's a whole regulatory apparatus that comes into play. That regulatory apparatus is leverage point two. Now they got a bunch of weak points, they got a bunch of exemptions and so forth, but they're still regulated. Regulated by the Securities and Exchange Commission and regulated by other folks. Now, what does Steve do with the money? You would think you just invest the money, but no, that's not what he does. He leverages it. That's why they call it leverage buyouts. What does leverage mean? It means you borrow money. So Steve takes his $10 billion and treats it kind of like you treat the equity in your home. And he goes to a bunch of banks and says, give me, for every dollar I'm holding with the pension funds, give me $9. The banks say, well, why? What's your security? What's your collateral? Steve says, my collateral is the stuff I'm going to buy. So I'm going to put up as collateral the companies and the properties, the hotels, the factories, the land that I'm investing in. I put that up as collateral. So now Steve is sitting there with $100 billion in assets. That leverage, that borrowing from the banks is your third point of attack. Sorry about that. This is a military metaphor. That borrowing is your third point of attack. The whole business model depends upon borrowing money from banks and issuing bonds. That itself is regulated. That's another point of attack. The regulators of the banks that lend the money. Now what happens then? Steve buys a bunch of assets, and what does he do? Cuts costs, does a bunch of stuff to make them appear more profitable. And then what does he do? He sells them to somebody else as fast as he can. That's how you make big money. All right? That's how you generate, and the fund, the Blackstone Real Estate Partners 8 fund, which is his 8th real estate fund in real life, and this is not my little story, in real life, that owns the hotel I'm staying in, the Wailea, that fund, right, has made 16% year over year. But every investment they bought into, they had to model, because 16% is what they actually got. In order to get 16%, they modeled each investment, and they wouldn't do an investment they couldn't model at 25. Now that tells you something about the kind of pressure that's being brought to bear on the businesses that private equity invests in your community. Because actual operating businesses generally cannot generate 25% returns in a sustained way. The business people in this room are all nodding their heads, right? It doesn't work that way. It doesn't even work that way for a giant hotel. It's a bit of a scam. It has to be. Right? Somewhere, risk is being laid off, right? People are being fooled that things that appear to be doable aren't really doable, right? Like for example, at some point the hotels have to be renovated. Now, how well does this all work? Well, I'm talking for our friend Steve. Oh, there's one more part about this. So remember I said the general partner, Steve, gets 2% of the pool. Okay? $10 billion is the pool. I can't do that quite in my head while I'm talking to you, but many of you can. 2% of $10 billion is a lot of money. It goes to Stephen's partners. It doesn't go actually all to him. That piece of money, right, is, by the way, taxed at capital gains rates. They have a special tax exemption. It's called the carried interest rate. It means that income is taxed at capital gains rates which are much lower than the income tax rates that ordinary people pay. So our friend Steve here is paying less as a rate, as a percentage of his income, than teachers, farmers, hotel workers are paying as percentages of theirs.
And that's because he can afford better attorneys.
Yes, well, when you have the kind of money Steve has, you can afford all, you can buy the process. So how much money is Steve worth today? He's been doing this for about 25 years. $20 billion. Now that's not a fairy tale. That's the actual net worth of the man. How much is $20 billion? Wait, it's more than the entire Hawaiian retirement system. But let me just finish. One more thing. $20 billion is a hard number to get your head around, right? If you're an ordinary person like you and me, right? So how much is that? One way of understanding how much $20 billion is Steve is 72 years old. If he spent the rest of his life trying to spend his money, and he lived to the ripe old age of, say, 92, he spent the rest of his life trying to spend his money, he would have to spend $275,000 a day. A day. That's where this ends up. But my point is, you can get to Steve. I've listed for you as a community, like Steve Schwartzman is an important person in this community. Right? He is in effect, as the managing partner of Blackstone, he is in effect the largest employer in this community. Right? Because that hotel that I mentioned that I'm staying at is, I'm told, the largest employer on the island of Maui. Right. So this is an important person in your community whom you may have never met, and whom you may feel yet you just cannot reach. But I've given you a list of how to do it. Right? The first is what Eric said. The first is talk to the limiteds. The limiteds are the pension funds. The limiteds. Second, talk to the regulators and to the senators and Congress people. So for example, there is a bill in the United States Congress called, it's got a somewhat colorful name, the Wall Street Looting Act. Right. It was sponsored by Senator Elizabeth Warren, and just in case you think I'm making a pitch for her, it was also sponsored by Bernie Sanders, Tammy Baldwin, Christine Gillibrand, and Sherrod Brown. Your senators have not signed it. Your senators are not co-sponsors of it. A small gesture in the direction of holding private equity accountable would be to get your senators to sign on to it, because it essentially regulates private equity in a much more serious way. So you've got limited partners, regulation of the private equity funds, the regulation of the assets they buy. The assets they buy are the hotels, the land, etc. in your community, right, which you can reach through state and local government. Fourth, it's the community, is the lenders, and the fact that the lenders themselves are regulated. Right? And lastly, the last thing, which may be the most important, is you. Right? These institutions like to be quiet and secretive. They don't like to be in big public confrontations with communities, particularly around issues that are very high profile, like, for example, water rights. Right? Water rights, you know, indigenous communities, this is hot stuff right now in American culture. So you've got a lot of points of influence here. And that's my message to you today. The history of the labor movement in dealing with private equity, you know, is in many ways an unpleasant history. It's an history of people losing their jobs and having their incomes cut and all this kind of thing, but it's also a history of really effective interventions. Right? The campaign that Eric was describing with Hilton and Blackstone was among the most effective things any union's ever done in modern times. Right? It can be done. These people are not immune, they're not all powerful. You can get to them, and you can change their behavior. And that really is the purpose of my coming all the way here to talk to you, is to give you that message.